Hello, welcome back. So, Alphabet, or Google as it's mostly known as, has just reported earnings and it looks like it's going a little bit down after this. It's about $120 less than today, about 5% down, it looks like. Let's see what happened. I was taking a look at the news here, and you will see that Alphabet's weakness expected, but long-term story hasn't changed, of course. Google misses earnings expectations amid light revenue, and some other things here. Google parent Alphabet stock tumbles after rare Q1 EPS miss, huge stock buyback program, which I love to see. And so I really urge you to not overreact. These things happen, and I will explain exactly what is happening right now. I am always saying that you should always be investing money that you don't need, so let it do its thing and don't worry too much about the current situation of the market because there is obviously a downturn. So that happens. That's not a big thing. But let's see what actually happened in the earnings report. And so I have the information here. Let me actually explain. Google misses earnings expectations amid light revenue, as you'll see here. Now, for the quarter ended March 31, Alphabet reported 68 billion in sales. That's revenue, of course, slightly below the 68.1 billion forecast. So this is basically the same thing, really. It's like marginally lower. But 68 billion in sales, right? Okay, let's see what Google actually did the same period last year. So let's go back to the income statement because it's very easy to get diverted from what is actually going on and pay too much attention to the trends, which is really a bad idea. And so if I go to the quarterly here, you can see the actual quarters, and let's take a look at Q1 2021 because this is Q1 2022, of course. So the revenue back then was 55.31 billion, and the revenue right now is 68 billion. So this is better, way better than last year actually, substantially better. And so the earnings per share totaled 24.62 below the 25.94 forecast. If we take a look at this one and go down, you will see that this is indeed a little bit better here. So there was a little bit of a decline here, that's true. Again, we're looking at 24.62 below the 25.94 forecast. Okay, that's the earnings per share, right? So this is about the net income. Now, the weaker than expected results come as Google tries to diversify. Company controls 90% of the market and all that. This is what is mentioned here. Another interesting thing that I need to point out is that Google also said its board has authorized a share buyback, which I think, frankly, is a very good idea because Google is actually undervalued right now, and especially after this drop is going to be even more undervalued. Now, this is going to be 70 billion in shares, and you may be wondering how much that is. The easy way to understand is if you go here at our stock analysis chart, you will see the market cap is 1.5692 trillion. If you use a calculator, you will see that they announced 70 billion in shares buyback. And so if we do 70 billion, that is divided by the market cap, let's just say 1569 over here, we're getting this, and we need to multiply by 100. And so they are basically buying 4.4 almost. Percent of the shares back, which incidentally is what they were doing in the previous years as well. That's actually, they're buying what they bought the previous last years. It looks like they're buying in the next buyback program. I don't know for how long it will last. Here it doesn't mention, but they are buying a lot of shares back as well. So as a stockholder, you should definitely be welcoming this because you are getting better value for your buck. And so the company is down right now. It says that it's 6.3 right now. It's actually at 5, I believe. Yeah, 5%. This gets updated pretty much dynamically. And so you will see here that this is 5% down for a little bit of a worse quarter than expected. But frankly speaking, you will have some quarters that are a little bit subpar. Overall, to my eyes, it's actually pretty good, and the revenue is increased much. Now, I don't like the fact that the net income has decreased. That's of course a concern, but overall I'm okay with what is happening right now, and I would definitely be accumulating shares, which is what I already did. Actually, I have already bought 4 shares of this one, and right now it may be beneficial to maybe buy a little bit more if this continues to drop. You're not gonna be getting a lot of drops from Google anytime soon, I'm pretty sure. This kind of slump, I don't think it will happen too many times in the future. We are actually in a downtrend right now, so all of these things are to be expected, and I'm not surprised at all. Frankly, I'm getting a pretty good deal here. We have talked about Google in detail. Has amazing financials. It's getting cheaper and cheaper. Great income margins over here. Great return on equity and capital employed. Look at this. There's like practically no debt. I mean, I love it. I personally love it, and I'm willing to hold for a long while. So don't get too stressed. Just let it do its thing. And this is the time, again, I've mentioned it, it's the time to accumulate, not the time to sell. That's what I would think, at least, and that's what I'm doing. So thank you for watching this one, just giving you the news of what's going on and what's actually happened in the report. Thanks again, and I'll see you in the next video. Bye bye.